All right, let's talk about something that hits every Canadian business owner's bottom line: meal and entertainment expenses. Honestly, understanding the little details we're about to go through could literally put thousands of dollars back into your business. But get them wrong? Well, that can lead to a very uncomfortable audit. So let's break down exactly what you can and, just as importantly, what you can't claim.
Just a quick note before we dive in, this explainer was prepared by Samir Al-Rashani with some AI support. Okay, let's get to it.
I want you to really think about this question, because so many businesses are not claiming everything they're entitled to. It usually happens one of two ways. Either they apply the main rule to everything, or, and this is more common, they completely miss the powerful exceptions that let you claim a full 100% deduction. Every single client lunch, every hockey game you take a supplier to, every staff party, they all fall under a very specific set of rules. Let's make sure you're using every last one to your advantage.
So here's how we're going to break it all down for you, nice and simple. We'll start with the one big rule everybody thinks they know. Then we get into the really good stuff, the exceptions. We'll look at exceptions for your day-to-day business, for travel, and for staff events. These are where you'll find those 100% claims. And finally, we'll get crystal clear on what the Canada Revenue Agency, the CRA, actually calls entertainment, so there's no confusion.
Okay, let's start with the absolute foundation. This is the rule that really governs almost every business meal you can think of. If you understand this first, all the exceptions we talk about later will make perfect sense. Here it is, the magic number: 50%. If you take away only one thing from this whole explainer, please let it be this number. It is the absolute bedrock of how the CRA looks at all these deductions. So here's the deal. For the vast majority of food, drinks, and entertainment you pay for to help earn income, you can only deduct half of what you actually spent. But here is the little detail that trips so many people up. That 50% limit applies to the entire bill. That's the meal cost, sure, but it's also the taxes and the tip. If you forget to include the tax and gratuity in that calculation, you're not claiming correctly. Okay, now that we've got the main rule down, let's get to the fun part, the exceptions. Seriously, knowing these is what separates the good bookkeepers from the great ones. We're going to start with exceptions that pop up when food and drink are actually a core part of your business. In this category, there are 3 key situations where that 50% rule just goes right out the window. First, when hospitality is your business. Second, when you're giving away samples to promote your products. And third, when a client pays you back for a meal. Let's dig into each of these 100% deduction scenarios.
Think of it like this. If you're a software consultant and you take a client to lunch, you can only deduct 50% of that bill. Simple. But for the restaurant that's serving you that meal, for them, the food is an entertainment. It's their inventory. It's their cost of goods sold. So they get to deduct 100% of their food costs for that meal they served you. The same logic holds true for an airline or a hotel that's providing food as part of their service.
Now, what if you're, say, a craft brewer or a baker or anyone who actually makes a food product? If you're handing out free samples to get people interested, like little tasters at a farmer's market, that is not entertainment. That's a marketing expense, plain and simple, and it's 100% deductible. But the key distinction is that if that same brewery owner then takes a potential distributor out for a full business lunch, that meal is right back to being subject to the 50% rule. This next one is absolutely crucial for consultants, contractors, anyone who bills expenses back to a client. If you're on a job, you pay for a meal, and then you invoice that exact cost back to your client, the CRA sees it in a totally different light. You have to report that reimbursement you received as part of your income, yes, but you also get to deduct 100% of the meal's cost as an expense. It's a wash. They cancel each other out on your books. Okay, let's move beyond the day-to-day stuff and look at special events and travel. Things like charity fundraisers, business conferences, and travel, well, they all have their own very specific exceptions that you really need to know about. In this section, we're going to cover 3 totally distinct exceptions: the rule for charity events, the very specific formula for conferences, and a rule about meals you eat on planes, trains, and buses that might actually surprise you. Here's a perfect practical example right from the CRA's own guidance. So Marina takes her client, Gustav, to a fundraising dinner. Because the main reason this event exists is to raise money for a registered charity, the cost of those tickets is 100% deductible as a business expense. No 50% rule. But, and this is a huge but, there's a critical distinction to make. That fundraising gala would 100% deductible. What if instead Marina bought Gustav's season tickets to the theater's regular plays? Even though it's the same charity, this is now considered standard entertainment, and boom, it's right back under the 50% rule. The key thing to ask is, what's the primary purpose of the event? Is it a special fundraiser, or is it just part of their normal shows?
All right, this rule for conferences is very specific, so let's walk through it. Imagine you pay a $1,000 all-inclusive fee for a 3-day conference. The CRA says out of that $1,000, you have to set aside $50 per day for food and entertainment. So, 3 days, that's $150. That $150 is subject to the 50% rule, which means you can deduct $75 of it. The other $850 of your conference fee, that is fully 100% deductible.
Now, this is a huge one for anyone who travels for business. Any meal that is served to you while you're a passenger on an airplane, a train, or a bus is 100% deductible. But be really careful here. If you're on a ship, a boat, or a ferry, those same meals are only 50% deductible. And hey, what about that sandwich you bought on the train but you lost the receipt? The CRA will allow a reasonable claim as long as you keep a detailed log, date, time, what it was, and how much it cost. Let's shift our focus now. We've talked a lot about clients and customers, but what about the rules for entertaining your own team? The CRA has specific allowances for events that boost morale, and honestly, they can be pretty generous. Okay, when it comes to staff parties, holiday parties, summer barbecues, you name it, you can deduct 100% of the cost. But there are 2 firm conditions you have to meet. First, the event has to be open to all employees at a specific location, no exclusive parties just for the managers. Second, you're limited to 6 of these all-staff events per year. As long as you follow those 2 rules, you're golden. And this whole available to all idea goes beyond parties. For instance, if your company has a general cafeteria that all your staff can use, its operating costs are 100% deductible. But if you also have an exclusive executive dining lounge that only certain people can get into, all the costs for that facility get knocked back down to the 50% rule. For our last section, let's get down to brass tacks. We've been throwing this word entertainment around a lot. But what does that word actually mean to the CRA? Let's go through the official list so you know exactly which expenses fall under that 50% rule. So here it is, the official checklist. It includes all the obvious stuff, right? Tickets to the theater, concerts, or sports games, renting out a private box, hospitality suites. But it also covers things you might not think about, like the cost of a cruise or getting into a fashion show. And as always, remember that taxes, tips, and any cover charges are all part of that total cost that gets hit with the 50% limit. And that wraps it up. We've gone through the main 50% rule, but more importantly, we've uncovered all of these different exceptions that let you claim 100%. So the real final question is for you to take back to your own business. Think about your travel, your staff parties, your promotional samples. After hearing all of this, which full 100% deductions have you been leaving on the table?